Good morning, all, and welcome to this session of Saral Paypack webinar. Today's webinar will be divided into two parts. The first part will be the presentation, and the second part will be the question and answer session. During the first part, I'll be presenting to you the topic of the day, which is fourth quarter return filing for ETDS return part, especially concerning with your salary. And how about do we go with until the e-return and the Form 16 generation process. So this will be the overall flow of the presentation. Okay, and the second part will be the Q&A session, wherein if you have any queries related to the topic which we have discussed, we have gathered today, so we will be open for such kind of question and answer sessions. So I request everyone to make a note of any queries you have during the presentation. If you have any queries, please make a note of the same, and during our question and answer session you can get to have your queries resolved. So for the queries, there is a window of questions. So I request during the Q&A session, so whatever the queries you do have, you can type it onto the question window so that we will answer. The other request to you is we have many members joining us today on this webinar platform, so that maybe by the time I read out, I proceed to solve your query, it may take a few minutes of, it may be taking a few time. So I request everyone to have a patience enough, and we will make sure that each and every query of yours are answered by the time we log out of this webinar. Okay, so saying this, so we will start. So, welcome to everyone, and the coverage for today's webinar is as mentioned to you during the mail. And today, let me go with the session coverage. So we will start from the basics. So that is from the initial settings for the TDS. So here, maybe if many of you might be using the software for quite a number of years by this time, but still there may be at some point you may be wanting to know what is the basic settings we require to do in terms of TDS. Okay, so I'll be speaking only and only in terms of TDS over here. So in terms of TDS, what are the settings we require to do? It can be in terms of salary settings, the TDS settings to be done in the salary master. It can be in terms of the employee master, and what may be the month on month. So by this time you might have already done your 9 months or 10 months of TDS deductions from the salary. So 10 months are already passed of salaries are processed, and by this time we have already finished with. But again, I'd like to revisit that point of month on month TDS deduction, and also the very important part is TDS declaration capturing. So how do we capture the declarations which are given out by the employees, and how do we account it for our calculation? And very importantly, the fourth quarter deductions and the salary details, how are we supposed to be reporting the same via the ETDS return in the fourth quarters? Okay, so and lastly, the Form 16 generation, the annual certificate of TDS, how do we do that? So all these things we will be having a coverage in the today's session. Okay, I hope I was clear with what we are going to cover today. So saying that, let me proceed ahead. So on screen you are seeing a Saral Paypack software, and which you all are very well aware about how to you assign on. So I'll not take into describing what is Saral Paypack and everything. So I'll directly quickly go in. As I mentioned, the first and very foremost thing what we will be touching upon is a settings. So as you are very well aware that our major setting for doing a TDS deduction is initially stating our own TAN number. So under the initial settings company detail, we have to make sure the TAN number whatever we have specified is correct. Otherwise our tax credits or our TDS credits may go on to us a different TAN number. So specifying the TAN number, enabling the TDS module, and specifying the TAN number holds your first level of setting, which is very, very important. So once this is done, so once this process is done, next is the salary. So salary settings would have been done by our implementers when you have initially purchased, seeing upon your requirements. They would have already done it. But post that, if you would like to know more about, like, how do I go about, if there is a new addition of a salary head, how do I go about including it for my TDS computation and all. So once you define the salary head, you will go to the assign heads to salary structure. So under the assign heads to salary structure, you will be selecting the structure of the salary for which the TDS has to be assigned, or which, for which salary heads the TDS has to be assigned. So here you will be creating the new salary head of your zone. So once you have created your new salary head, making the salary head refer to the TDS point is very, very important in terms of TDS. So this is one point which you have to make sure that this is properly referred over here. So if there is a no reference over here, or a inappropriate reference over here, then your overall TDS calculation will go wrong. So here you can see there is a list. This is list as given by the government. So here, how the government has given what are the different heads under which the salary or the salary heads will be accounted. So that are provided over here. Like basic will be mapped to basic, HRA will be mapped to HRA, DA will be mapped. For DA, there are two mapping points here. One is DA considered for your HRA exemption. One is DA not considered for your HRA exemption. Where DA considered for HRA exemption will be when the DA amount will be considered for calculating the HRA exemption portion. Whereas if you point it to DA not considered for HRA exemption, then this DA amount will not be considered during the calculation of your HRA. So that is very important to be understood, when to, I mean, which particular head has to be referred over here. Next comes others. Others is basically there are four statutory heads which are considered as a direct mapping, which is basic, HRA, DA, and conveyance. Other than that, any other allowances, so if you specify any salary head as an allowance, maybe special allowance, education allowance, washing allowance, medical allowance, whatever the allowances you mention, everything will come under other allowances. So there is a specific head called as other allowances. And anything you specify, any other salary head which you specify which is not under a allowance mode, so which is not given out as an allowance to the employee, then that has to be mapped to others. So either it will be other allowances or others, other than the four basic salary heads. Okay, so these are the things. Other than that, if you have incentives or commissions, children education allowance, children hostel allowance, for that you have separate heads. You can see here children education allowance is there, and children hostel allowances are there. So you can map it to the respective TDS heads also. Medical reimbursement, LTA, will come under your reimbursement portion. So if you are mapping your reimbursements right away from your salary itself, from the salary structure itself, you are handling out your reimbursement, not using the reimbursement module separately, then you can refer it to medical reimbursement or LTA as the requirement goes, or as the salary head speaks. And there are certain other allowances which are very specific to the segment. Mostly we see these in the garment sectors, like entertainment allowance, tribal area allowance, then high altitude allowances. So these are all very, very rarely we see all these things. So here we have. And others, as you can see, these are all perquisite. So if perquisite is forming a part of your salary structure, then only these heads are to be utilized. Otherwise, these heads are particularly for your perquisites only. Okay, so all your employer PF, or your rent free accommodation, or your club expenses. So here, depending upon which salary head you are assigning here, so that specific reference has to be made into. Okay, this is very, very important, because according to this only your porting calculation, everything will take place. Fine. So once this is completed, so what next? So next is my employee master. So once my salary structure is done, next is in my employee master, the mappings have to take place. So employee master, so what am I supposed to be doing under the employee master? So here I have a minimal number of employees. I have just created a file here with a minimal number of employees list here. So what is that important in employee master? So employee master, the PAN number is important. So if any employee is crossing a gross salary of 2.5 lakh per annum salary, then you have to enable this checkbox and you have to give their PAN number over here. If the PAN number is not available, there are three different options to be applied in, which is PAN applied, PAN invalid, and PAN not available. So accordingly, the values have to, I mean, the informations have to be put in. But one thing you have to be very sure, if the employee is crossing 2.5 lakh and still the employee has not provided a valid PAN, then 20% tax deduction will be applicable on the amount crossing 2.5 lakh. So that is why you have to be very, very clear that all your employees will be providing a valid PAN number. Okay, so this is one thing you have to be very specific on. And also the other point is, giving a PAN number itself is not sufficient. You have to provide relative details also. Like what is the relative details? It is basically the date of birth of the employee becomes mandatory. Obviously we will capture all these informations in the employee master, but if the TDS is enabled, that also becomes a mandatory point for my employee master. Earlier, before enabling this TDS detail, the date of birth will be an optional field, whereas once we enable TDS, the date of birth will become a mandatory field. Okay, so then very importantly, after to that we have to check is whether this PAN number is a valid PAN number or not. So how do I do it? How do I get to know that whether my PAN number or whether the employee given PAN number is valid or not? So I have to go to click on verify. So when I click on verify, it will automatically speak to the relative IT database, and there it will identify whether this particular PAN number is valid or invalid. Now here, if you can see, this is not a valid PAN number, it is a dummy PAN number. So if I have a valid PAN number, so how will it speak on? So here you can see this is a valid PAN number. So PAN is valid and is present in database. Only and only if you get this message and a tick mark over here, then you can proceed ahead with this employee's PAN number. Else, this is not to be considered as a valid PAN, and accordingly, this will also create a problem going ahead. If you go ahead with the invalid PAN number, going ahead, you may receive a default notice for providing invalid PAN numbers, which may also attract short deduction notices alongside your PAN invalid cases. Okay, so be sure of this. And if you would like to know whether this PAN number belongs to the same employee or not, you can use this option called as traces. So when you go for this option called as traces and select all and click on verify, here it will ask you for your traces login. So whatever the login you have alongside at traces portal, so that user ID and password, once you provide over here and click on verify, automatically it will also list what is the name of this PAN holder, whether the name as per your employee record and as per the PAN number matches or not. If there is a mismatch, you can ask for the employee why there is a mismatch between the PAN record and the employee record details. Okay, so that is important to be noted over here. So this is the point what we have to take care. Then the remaining process goes the same. You will be entering the salary and processing the salary. So I will not be touching upon all the other salary related processes and all. I'll be just showing you where and all the TDS effects will come in picture. So the other thing what you may see is leave encashment. If at all any employee is asking in for a leave encashment in any specific month, then that how it will be taken into consideration. So here there is a leave encashment taken up by the employee in the month of April, so that will be considered for your TDS computation or not. Now TDS computation, this there is two different scenarios. Either this value, that is a leave encashment value, can be merged alongside the salary value, and because it is, as it is, it will be provided alongside the salary itself, it can be merged with the salary, or it can be computed separately for the TDS purpose. Okay, so here if you are merging with the salary, then this is the only process, the normal leave encashment processing you will have to do. But if you are going to do a separate computation of TDS only on the amount of leave encashment, which is called as a one time TDS deduction, then you have to select this particular record and click on this TDS amount. Here the employees in the specified month for where and all the leave encashments have been calculated, it will come on click of compute. If at all this amount is available for tax computation, that is if the employee is crossing your 2.5 lakh and they will be eligible for tax computation, then the value of TDS will be automatically calculated and mentioned over here, which on saving will be considered as a separate tax deduction. So salary will be having a separate tax deduction, whereas this additional income in a specified month will be having a separate tax deduction. This is called as one time tax computation. Okay, but generally we all are comfortable going with merged with the salary concept, that is this value also will add up to your salary value itself, and then the TDS on as a whole will be calculated. So that will be a easier methodology, so we will go with the same thing over here. So this is about the initial settings. So we saw with the salary, so in salary how the TDS heads have to be referred. Later we saw the employee master, so in employee master, how the TDS have to be enabled and what all changes we have to do and what we have to make a note of for verification. Okay. Now, next, when we start with the first month of calculation, okay, for the very first month of calculation, how do we take the pointer or how do we take into consideration? That is very, very important. So here, only for the first month of the financial year, when we are looking into the first month of the financial year, you have to go to this option setting, and here you have to select the financial year for which financial year the TDS is being accounted. I have taken here financial year 21-22 because 22-23 we have not yet covered, I mean completed in the financial year go, and the fourth quarter return filing complete processes, the FU, there may be a few changes, may not be a few changes. So we are not sure until the March ends, because May is a due date for filing. So that is why I have not taken 22-23. But because there is no changes, no major changes between year 21-22 and 22-23, I am considering 21-22 for the demonstration purpose. If you feel that there is any changes, you can let me know. I will demonstrate in the 22-23 also. Okay, so coming to this financial year, first I have to select the financial year for which I am doing the TDS deduction, or I am starting. And there are certain general settings here which at times may be specific to the financial year, at times maybe they may be general also, like non-editable IT details. This is irrespective of the financial years, this option will be available. That is, once the software computes whatever the income tax is applicable for an employee, as a user I must not be able to edit any of such kind of data. If such is the scenario, if I want to go with whatever the software gives in, then I will mention it as non-editable IT details. Otherwise I can set it as unchecked, so at any point of time I can edit the income tax computed by the software. Then majorly we see is calculate on proof amount. Calculate on proof amount is basically like when the declarations are given by the employee. So they will, in the year start, you may be taking certain amount of declarations from the employee. So they will just say on the go, they will say, okay, I'm going to invest so much in mutual funds, some X amount in LIC, some X amounts in PPF. Maybe by the year end, they might have exceeded, or they might have not done the actuals which they have declared also. So at that point of time, the calculation should always be based upon what amount of proof they have provided, maybe the investment receipts or whatever. So if you enter the investment details, whatever the proof they've given under the calculation, calculative amount value, column, only then it will be considered for your tax computation as an exemption. Otherwise it will not be considered for your calculation of tax exemptions. So if you want such kind of scenario, then you can enable this option. If you keep this unchecked, what happens is whatever the employee will declare that I'm going to, so that itself will be considered as a full exemption amount, and it will be, but it can be changed at any point of time. Once the employee provides a lesser proof over a higher proof, that amount can be changed as per the proofs. So but it will be like work, additional work which you have to keep on check whether they have provided or not. If they have provided, then change. If not, then how do I take it? So that will be an additional point. Then you also have this auto exemption for food and non-alcoholic beverages. This is basically for your food coupons. So food coupon, we have either 50 rupees or 100 rupees depending upon the work shift of the employee. So whichever is a value you mention, according to that 1500 or 3000 a month will be considered as basic exemption for the employee. So if you say 50 rupees, it will consider 1500 a month, and if you can put up as 100, then it will consider 3000 as a basic exemption under food coupons for the employee. Okay, so then one more option is this lock regime selection. As you all are aware about, now there is two regimes from past 3+ years, which is one is a new regime and one is a old regime. So basically, as per the government class, it says once an employee chooses a particular regime, it will be locked for the whole year. Or if they want to have a change of that regime, then they have to do it only and only during their IT return filing. From the employer's perspective, whatever they declare at the initials, so that will be considered and it will be locked for the whole year. So such a way, so initially itself, so the first month itself, if you get a declaration from the employees stating which regime they want to have the calculation done with. So once you have enabled the regime, maybe the new or the old one, whichever is there, if you have already passed the regime selection of the employees, then you can enable this option called as lock regime, so that the regime changeover cannot happen in between of the year. Okay, so if you want such condition, then you can enable this option. Okay, so once this is done, so once this is option settings are done, so which is done once in a year, only at before to your first year first month computation, first month of the year computation, this option settings have to be done. Then you will not come back to this option setting at any point of time. Okay, so what will be done? So initial first month, probably there will be no one who would have given you a declaration, or there may be not any major things to be taken into consideration and all. So what will be the first month process of yours? It will be just go to this port data. So once you click on port data, it will automatically start pulling in all the data from the salary module and the relative other income modules also. It may be your leave encashments, it can be if you are given reimbursements, then reimbursements, or any other earning things if you have, it may be available. Okay, so once you have given it, so select the employees for whom TDS has to be calculated, and here you can see which month. Only the black colored month is considered as the created month, the remaining are extrapolated month for your calculational purpose. Okay, so the data is ported. Now I have to indicate to the software for computing the income tax. So I can just click on compute. before to that, if I want to view what data has been ported, I can just view. This is not a mandatory step, it's just for my own referencing. If I want to view, so just to view what data has been reported, so that data I can see over here. Okay, so I can also export and keep it in my Excel. So if you can see here, majorly, if you can see, for everyone, there is a medical reimbursement, there is an LTA, there is a leave encashment, there is a free food and non-alcoholic beverages. But nowhere you can see basic DA, HRA, all this information. Just if you can imagine why this is not happening, if I go back to my process, so if you can see here, this is all set to none. So I should have done the settings over here, so which I had not done. So that is why all are coming up here. So I will come back here. So this was one thing I was supposed to be doing in. So you can see how it is going to affect all your things. Okay, so there are two structures. I'll check whether the other structure is set. No, even the other structure is not set in. So there is a deduction head also. Deduction head, if it is anything related to your investments, then you can put it into the relative investment referencing. If it is not related to any of your investments, then you can just mention it as none. So it will not be taken into account for your tax computation. Okay. So once this is done, come back over here to the port data. Now I will port the information. Okay. So now if I see the data, now if you look in, now you can see basic, HRA, DA, all these are coming in because I referred it. So this is a mistake if takes place, if at all I have not properly mapped or not mapped any of my salary head to the relative TDS referencing points. Okay, so after this I ask for compute income tax. Now I am instructing the software to compute income tax. Okay, so once it is done, so I can directly go to port computed TDS to salary, or if I want to see how the tax has been computed, so I can say computation details. So it will take me to another within internal module. Okay, so here you can see for each and every employee, so that this is called as a tax meter. So here where we can see all the salary information. So the salary total computed for this particular employee is around 8 lakh plus, and you can click on this three dotted button and you can see how this 8 lakh plus has been accounted. Okay, summarized information is made available here. So what and all is taken into consideration, how much is exemption, how much is non-exemption. Again, further to that, what heads are accounted. So you can see the changes here, the allowances and all those things whichever has been taken into consideration. Everything is a perquisites. So there is a medical allowance is not available here, so it is not given. Then comes leave encashment. So for this particular employee, there is a leave encashment. So you can see the leave encashment is coming under others by default, and it is completely taxable because it is a part of your salary. Okay, so all this, if everything is whatever is shown is perfect, I can come back and I can say port computed TDS to salary. Now the TDS whatever has been computed, that is the tax whatever has computed. Now 1/12 of the part, because it's the first month of the year, so 1/12 of the income tax has to be considered as a TDS and deducted from the salary. So I am now instructing the software for port computed TDS, that is I am instructing it for calculating the TDS value and putting it across to the salary editor. Okay, so this is a month. So salary, if you have multi-salary structure, you can go with the salary structure, or if I want to see all the employees in one go, I can say show all. So this will now show me all my taxable details. So how much is the employees taxable one, how much total tax they are supposed to be paying in the whole year, and accordingly divide by 12. So this becoming the first month, divide by 12, this is the month's TDS. Now, you as an employer may ask the employee to pay the same whatever the salary TDS is computed. So the same amount can be deducted from the salary of an employee, or else maybe for the initial months you can set aside an X amount, similar like we have how you have a standing instruction set for maybe 3 months or 6 months. Initial months, one X amount can be deducted. Post that whatever the software has suggested, so the same amount can be deducted. So if you are proposing a standard deduction, so how do we do? So here there is an option called as TDS SI, which is standing instruction. So here add the employee for whom a standard amount has to be given out. Okay, for this employee, I'll say for the initial 3 months, deduct 7,000 each. Okay, only for the initial 3 months, deduct 7,000. Later on, whatever the software will be taking up, that has to be accounted, or it has to be deducted. Now you can see this is colored differently. Now if I say port, so for the employee for whom a standing instruction is given, according to the standing instruction, the value will come, even though the TDS did accounted here is different. Whereas for the other employee, you can see it as the whole amount. So whatever was calculated here, the same amount will come. So if you want to continue and go ahead with the same amount, then you can say save. Otherwise, if you want to make any kind of changes, you can make the changes. So now 7 and 7,500 has come. If there was any one time taxing, that is in leave encashment, I showed you how the one time taxing will come. So that will be listed separately over here, one time tax. It will not be merged with this particular value. So currently there is no one time tax, so it is not displaying any. So how do we see the tax which has been deducted from the salary of an employee? We can go to the salary editor. So process the salary editor. So once the salary editor has been processed, you can see the TDS, whatever the TDS was getting deducted from the employee salary. So that can be viewed. So for this employee, there is a TDS of 7,000 rupees. You can see it over here. And for the other employee, 7,500 is the TDS. Okay, so this is how the calculation will go about. For the other employee, there was a zero TDS. So if you see the other employee, there is no TDS deduction for this particular employee. Okay. So this is how the overall month on month porting will come in picture. One second. Okay. So this is a month on month porting of salary TDS. So how we will calculate, how we will port, and how we will get the TDS deduction back to the salary. Now from the reimbursement perspective, so if you are going for the reimbursement, so initially when the reimbursement is created, so how it will be taken into consideration, the reimbursement here in the reimbursement module itself, there is a TDS reference. So here we will be referring it out to which module, or under which TDS head the reimbursement will be taken into consideration, and here how the exemption will be given out, so that these two are relative to your TDS process. So accordingly, you will be going in. This will be considered as a perquisite part and will be considered under the TDS. And same goes for your LTA also, leave travel allowance, or LTC, what you call. So here, once you say LTA, here I have set it out to bill amount. So to the extent the bill is given out by the employee, to that extent the tax will not be accounted. That is, it will be exempt. The remaining amount, to the extent bill is not available, the TDS will be calculated on the X amount. Okay, and for food coupon, by default, we have already set in the food option setting itself per day 100. So yearly 3000 will be exempted from taxing, and it is accounted under free food and non-alcoholic beverages head of TDS. Okay, so this is for your reimbursements part. So once likewise it is done, so the first month is done, so similarly the next month will be created. So next month creation is there. So once the next month is created, the same process runs again here. Okay, so again I will just process out the salary TDS editor once. So the leave tracking, everything will take place. If there is any leave tracking anything, so the leave trackings will all take place, and later on the values will be counted. So here you can see currently the TDS is not calculated. So there is no TDS as of now because my TDS porting is not yet done. So for calculating the TDS, I have to go back again the same process, port details. So I'll port the details. Okay. So I'll select the employees for whom now the second month is created here. Okay, now I'll directly go to compute income tax. I don't require to view it because first month I have already verified all my viewing. So I'll go back compute, and then directly I'll go into port computed TDS to salary. Okay, so here again structure wise or all. So here again you can see this is a value here. So port again for the next month also for this first employee I have already set a standing instruction of 7,000. So 7,000 is defaultly deducted from this employee's salary, and save. So this will automatically go and sit into the salary editor. So now once the porting is done, I again come back to my salary editor, and I will process my salary editor, and I can see my TDS deduction in their salary. Okay, so this is a month on month process. Now you may be wondering, like initially itself, if the employee has already referred like tax regime, so how do I take into consideration the tax regime? So I can first go and see this tax regime summary. So by default, until this year, that is to until year 22-23, default regime was old tax regime. So software by default will keep all employees under old tax regime. If the employee has specifically asked in for a new tax regime, only in such scenario the employee will be shown under new tax regime. Otherwise it will be by default old tax regime. So if at all you want to switch the employee to a new tax regime, then you can just check that employee, and here you can mention it as switch. Okay, so accordingly the tax calculation will be changed. Switch tax regime you can do up. Okay, so this is for switching in bulk. If you want to switch the employees from the old tax regime to the new tax regime, probably in the next year, as per the latest budget, the next year the new tax regime is going to be the default tax regime. So here you may be seeing by default all employees coming under new tax regime. So only you will have to switch the employees who are under new tax regime and who have opted for old tax regime. For them you will have to come and switch on to old tax regime. Otherwise by default all employees will come under the new tax regime. Okay, so this is the thing you have to take into consideration. So that was my tax regime selection. So accordingly you can see that one employee was transferred, now new tax regime. So once you have changed on, once you have given a switch and the computation, the recomputation has taken place, and the employee has now been switched to new tax regime. Okay, so that was with respect to your tax regime. And if you would like to also have a detailed information about what are the calculational pointers, like how my calculation has been considered, or how the employee's calculation has been considered for the tax computation, you can go with this IT summary. So here each and every information will be detailedly provided. The one which you can see in blue color is an employee who is under a new tax regime, whereas the one who are in black color are the one employees who are in old tax regime. Okay, so this is the overall summary of the employees calculation. You can see here how the TDS is income tax is accounted, and then post that how the TDS will be taken into consideration, and what are the main components. Main components are basically your basic, commission, DA. So how much is considered, allowances, the different kinds of allowances. So here the list is provided. Okay, then others, if you have put any under others like leave encashments, bonus, arrears, gratuity, all this will come under others. So that if at all the calculations are available in any of your months, so that will be listed over here. Perquisites, if any, so that will be listed over here. Okay, then chapter 6A deduction. By default, PF will be taken. So if PF deductions are there, then PF will be considered for your ATC. So here you can see the PF deduction coming in picture. Okay, and this all information can also be taken up to Excel. For your information, you can take up to Excel, and if at all you feel this all this data is incorrect, then you can click on clear savings. So this chapter 6A deduction, completely the savings informations will be cleared off. Okay, so this is about your IT summary. So now probably now you are in the second month, so I'm already in the May month. Now you want to send a declaration form to the employees. Okay, so say for example the employee, now you have to get the information. So initial start of the year itself, you will send the declaration form. They may give it to you by the year end, but you might inform them to make preparations from the start of the year itself. So how do I get the declaration form? So there's the option declaration forms. You can click on export. So on click of export, you can either export these files into a specific folder and then mail them individually, or else if email configuration is already done in your software, that is your Saral Paypack, then you can directly click on select the employees for whom the declarations have to be sent, provided their email IDs are available in the employee master. Okay, and click on email. Accordingly, the mail will be sent to each end. So depending upon what kind of configuration you have done, it can be your SMTP connection or your Outlook. So whichever the connectivity configuration you will have selected, so according to that, the mail and the declaration form as an attachment can be sent off. Now I'll be showing you from the perspective of putting up in the folder. Okay, so I'm selecting two employees here, or let us go with all the four here. Okay, export. So if you are sending an email also, the same Excel file what you are seeing, so that will be sent to the employees. Now along with that, you also have to capture the form 12 double B. So this is one of the other declaration, statutory declaration, which has to be collected from all the employees. So that also can be exported or emailed with the data or without data. With the data means whatever the data is available in the software, so that will already be made available in this Word file. This will be a Word file, and whereas this declaration form will be an Excel file, so that will be made available. And click on export. So for all the employees, the form 12BB is being exported with the data. Okay, so I go back to my folder, so you can see here all these files. So the form 12BB in Word format and the declaration form in the Excel format. Now, when you're sending it to the employees, you have to be mentioning properly for the employees not to change any of the format given over here, because these are the forms. The Word format is made available from the department, so you have to give the information, or you have to capture the information as per their information itself. So you have to be sure to not to variate, add any new columns or anything over here. According to the requirement only this is given. So the employee has to fill this details and send mail it back to you. Okay, this is one format. The second one is the IT declaration. Now this also is not to be changed, means any for rows included, excluding any rows or anything. Don't do any of these things, because this is a template which is recognized by the software. If you do any kind of changes, maybe the row deletion, additions, column deletion, addition, sheet deletion, additions, if you do any of these changes, then the software may not recognize this template, and it may not import the data into the software. Okay, so here first, here all the details have to be informed. So there are sheet by where there is multiple informations to be captured. There are sheet by sheet informations to be capturing over here, like ATC information, that is your investment. So in the drop down, all the different kinds of investments which are applicable under ATC are made available. And also there is a separate information sheet wherein the already available information is given. Like you do not have to re-enter, the employee do not have to re-enter these information, like that is your statutory provident fund, and if they are contributing for voluntary provident fund, then voluntary provident fund information will be made available. The other than that, whatever they asking, so that informations have to be mentioned over here. Maybe I'll say X amount is here, LIC premium of 25,000. Okay, so this is the one. 80G, that is the donations. So you can see the list over here. So ATC, if you want, you can see the list for which the donations are applicable, and the amount you have to mention out. Then NSE information. So if you have purchased any new NSE, employee has purchased a new NSE, then that information can be provided over here. So given this, all this, then here basically we have captured multiple in the sheet level we have captured only ATC and ATG, because that has huge number of records. Whereas the remaining, like if you say, if you have invested in NPS, if you are investing in NPS, then that will be separately shown here. So that will be a single grid data. So that is why here separately we will be showing up the information. Or if you are paying educational loan, and for that educational loan, your interest, whatever is there, that you can claim an exemption on, provided you are in the older tax regime. Okay, so here you can see. And then also we have which commonly we see other is 80D, medical insurance premium. So here you have the option. So 80D, so this is for self, that is your own and your dependent family. And the second one is for parents. And if the parents are senior citizen, first you have to mention it here, yes or no. So below this parents only you have to mention it yes or no. So according to that, the limit will be increased from 25 to 50. If you say no, then the limit even for parents it will be kept as 25 itself, 25,000 tax limit. If you say yes only, the limit will be increased to 50,000. Then there is separately a preventive health checkup which is of 5,000 rupees. So that can be separately shown up over here. And lastly is preventive health checkup for parents. If you can either claim preventive health checkup of 5,000 under your own SSEs level, or for the parents level. So both can be taken into consideration over here. Okay, then comes HRA. If you are claiming HRA exemption, then how are you going to provide the HRA details? Are you going to claim it on a yearly basis or on a monthly basis? Major of us keep on the yearly basis, so keep it as yearly. And you have to provide, below there is a details of month on month rent which you have paid for the whole year or partial of the year, or anywhere in between if there is a increment. So that information you have to provide over here. Accordingly, if there is a children education allowance or children hostel allowance concept in the software in your salary structure, then depend here the number of school going children, maximum up to two school going children or hostel staying children information can be given for each of the month. Okay, again, if you are from the metro cities, you can mention it as yes, so it will change your HRA computation also. This is a second thing which you have to do. Then most of us we see is housing property, loan on home loans. So if you have taken any home loan, you have to mention it as yes, and here you have to provide the details. So whether it is a self occupied property or a let out property, and whether the loan is borrowed on or after 31st of March 1999, what is the address, what is the interest amount you are paying. So interest amount here, if you are paying for self occupied, on the first column you have to mention. If it is a let out property, then you have to mention it as differently. Then these two are not available for self occupied. Gross annual value and municipal tax, it will be available only and only for your let out property. So if you are claiming under let out property, then you have to provide the gross annual value of the house and the municipal tax paid for that particular house. Here we are computing only the interest component. If we are the principal component of the EMI will be given under ATC itself. Okay, so you have to enter it under the ATC as where is it, housing loan repayment. So here itself you will have to show this value. Okay, so this is about the entry part, how the employee. So tomorrow if an employee approaches you, like what data, where is it, how am I supposed to be giving it. So this is about the information. If the employee feels that they want to switch, okay, instead of you doing the switch, if the employee themselves want to switch between the regime, they have the option here itself, switch regime. So they can see under which opted regime they are. So here in the comparison table itself, it will show which you have opted for, so they can opt for the other one. Okay, now before opting, if they would like to see compare between their taxing for old regime and the new regime, then the last sheet will speak on the tax comparison. Okay, so currently they have opted for the old tax regime, so this is the total salary. So as per the old tax regime, this is the tax which they'll pay, and as per the new tax regime, this will be the tax. So here overall taxing also you can see, and tax saved as per the new tax regime. If it comes in negative, that means old tax regime is better than the new tax regime. But if it comes in positive, then new tax regime is better than the old tax regime. So the employee can have a look into how the calculation is also taken into consideration, and accordingly they themselves can identify which regime they want to go ahead and select the same. But make sure to clearly inform the employee that this regime changeover can happen only once in the financial year. It is not as and when 6 months once they come back to you and ask for a change of tax regime. Okay, so this is with respect to your declaration entry. So once this declaration is entered, so once this declaration form is given out, so the employee will get back to you at maybe at the initial period itself. They may send in a declaration, or maybe at the flag end of the year they may come back to you by providing the declaration. So once they provide the declaration, then your computation will automatically change according to whatever the declarations you have taken into consideration. Okay, so currently I am taking that the employees have not declared back to you, even though you have given the declaration in the month of May. I'm taking into consideration that the employees have not given back the declaration. So in the uh, May month, the tax deduction will go as it is. I'll go on to create the new month, which is the June month. Okay, so the same goes again, port data. select all, port data. So third month. So this is how step by step you will be going on. So just say compute income tax. Okay. So once the computation is done, port computed TDS back to salary. So this is for the June month. So here in the June month, the new employee has come in picture, and you can see that this new employee, there is no taxable income coming in picture. So if you wonder why this employee salary is not coming in picture, maybe after entering I have not given the salary, so the salary details of this new employee is yet to be given. So I'll go back, say port. So now instead of porting all the employees, I can just port a single employee, because the remaining employee salary is already ported and computed. Okay. So compute. So only for the single employee the computation will take place. Then lastly, port computed TDS to salary. So now you can see the calculation here. But even though you see the calculation, you can see a small asterisk button, and you can, if you clearly observe, this is a huge amount as compared to 3,80,000, where 2.5 lakh goes into your exemption. The remaining around 80, it's 1,30,000. Around 1,30,000 is only taxable, which is again at the 5%, even though this employee has selected the old tax regime. But 14,000 is a huge amount. So why this is coming is because you can see a small star button over here, and the star button says this person is not having a valid PAN. Because this person is not having a valid PAN, and here over and above 2.5 lakh is the taxable income, that is why the tax is getting calculated at 20%. Okay, so this is the reason why the calculation is going higher end. Okay, and you can see all those things. Say port again here, this is a third month, so up to 3 months the salary is given as 7,000 itself, and I save. And the same can be seen under my salary editor also. Okay, so now the fourth employee comes in picture, so the TDS is there. The third other employee, there is no TDS, and in the other structure, both the employees, you can see the TDS. Okay, so this is how it happens. So that completes my first quarter. So once the quarter is ending, you come to the e-return portion. So e-return, you have to now do your e-return filing once the 3 months return TDS deductions are done. So by parallel in the back end, you might have already paid the tax amount. So whatever the month on month you have deducted, you might have paid already. So you just come over here, click on select it as a quarter for which the return is to be filed, and click on port data. So you come over here. So for the first quarter, first time do a default setting. So every month what is the tax deduction date, and what is the salary payment date karke you have to mention. Okay, that is basically a salary payment and tax deduction date. Apply default payment type. So this, if I want to make any changes over here for with respect to the dates, I can do it. Okay, and say port. Now while porting, you can also filter the employees and port. Not to port all employees, I want only specified employees, I can port it. But ideally we suggest into showing all the employees. Once they cross the 2.5 lakh gross limit, show all the employees in your TDS return filing. Do they have TDS or not? That doesn't matter, but they have to be listed onto your e-return filing. So do not select this option. Do not put those employees having TDS amount 0. Why I am stating this is because finally when you are going to generate your form 16, if you are not showing initially when there is a 0 TDS, you are not showing, maybe in the flag end fourth quarter or the third quarter, the employee has an additional income and TDS is getting deducted. At that point of time, if you show the employee salary deduction, the part A and part B of the form 16 will mismatch. Whatever the part A shows as a gross salary and the part B shows as a gross salary, there will be a difference of the incomes. So to avoid this difference of income, right from the first month itself, even if they have 0 TDS, show them during your ETDS return filing. It will not matter at any go. So if you enable this, what happens is all those employees who are having 0 TDS will not be listed. So I will not prefer to check this. It will depend upon you again whether to go with this concept or not. Then consolidated deduction for salary and one time, that is one time tax deductions, if there are, like under leave encashment, bonus, gratuity and all, if there are any one time tax deductions, then if you want, basically what happens is one time tax deduction will be shown separately as a separate deduction and TDS deduction, and salary will be shown as a separate monthly amount and a TDS deduction. If you don't want that separate information, two different deductions to be coming up for a single employee, you want a single deduction for the whole overall month, then you can check this checkbox saying consolidating. Otherwise you can keep it as it is. Okay, now on this, say port data, so all the records will be ported. So where can I view it? I can see under deductions under e-return tab. So here all the informations are there. Okay, you can see 10 records over here. So what are the tax being deducted, and there are also 0 TDS employees here. Okay, now whatever the challans you have paid, so the challan information we will be entering over here. If you have paid equal challans, then you have to enter the details here and go. No, if you are not yet paid, then you can also pull the data from the software itself and you can pay off here. When you are pulling the data from the software itself, you can use this method of from deduction. So it will specifically create only the required amount and you can go for it. So if you're already paid, if you're not paid, then here the e-payment method is there. So you can, it will directly take you to the e-payment window, and from there you can make the payments also. Here, considering you have already paid the amount to the bank, save. Now, if you could observe, while I was selecting the deductions, I have also selected the 0 TDS employees. So, as per TDS, even 0 TDS deductions have to be linked to any one of the challans. So, that is why I have included even them. So, this is the 0 TDS one what I spoke about. Okay, so likewise, whatever the challans you have already paid, so you can directly click here and enter, or else the other way also. Say for example you have already paid it, so 17,000, however you have done the payment, breakups, education cess and income tax breakup you have shown. So according to that only you have to enter over here and you have to do the details. Okay, save. So this is, I have entered. Now I have to link the deductions. So link deductions. Where are this? Okay, fine. So link deduction, it will list there and you will go ahead. Okay, so this is about the process. How do I identify whether they are linked to the challans are being linked to the deductions or not? You can get this information from the TDS ported and linked information. So you can see total TDS is 21,000, ported TDS is 21,000, whereas linked TDS is also 21,000. If all these three values are equalized, then the values fully have been ported from the salary module to the e-return module, and all the ported income, ported TDS has been linked to the challan. If there is a difference in these values, that means at some point your process has gone wrong. So this has to be equal for all the for these employees. So once this is done, then you can take a default data quality report. Data quality report will help you to assess what is the accuracy level of the data what you have given. So you can see here 100% means your data is fully accurate, so not to worry about. But if you say any other records coming in down, so here it says higher rate deduction 0 of 10 means there is some mistake, you have to look into that, and 85% you have to look into that. Challan details 0 of 3 0%, you have to look into that. Late deduction interest 100%, there is no problem. Okay, so late payments, so there is no late payments, you have paid all within the due dates, so you can be ensured that okay, nothing is going wrong. Higher rate deduction, this one record should have was at a 20% tax deduction, but I have not mentioned the remark as 20% tax deduction, which is a mistake which I have to rectify before doing my TDS return filing. PAN percentage, one employee is not having a valid PAN number, so 20% for this employee I have to do a 20% tax deduction. Challan, all the three challans are not verified, so I have to make sure that I have to verify it before doing my ETDS. There is no late deductions and there is no unlinked deductions also. So if there is unlinked deduction also, your e-return will not be successful. So we will do one by one. So first one was my deduction entry. So under deduction for the specified employee, the person remark was not flagged. So here I have to flag it as PAN not available, higher rate of 20%, and save. Okay, so that is how I am supposed to be changing the portion. Then challan here itself you have the option of verification, so you have to verify after 24 hours of online payment or 3 working days of counter payment. You have to make sure you have verified the challan, so that you can make sure that there is no challan mismatch between your data and the old task information. So this is very important to be checked in. So after that you go for your e-return process. So this is your e-return. First you have to download your CSI file. So here we are now specifically mentioning a separate tab. There are two tabs now. One is direct download. So if you click on direct download, this data will download from the tin website. Okay, so it will click on download and it will download from the tin website for you. Now if you have paid your challans and all, now the latestly current most of the banks have navigated or migrated to income tax department e-pay portal. So from tin website, now only around 3 banks are only available for online payment. That is Challan ITNS 281 payment from the tin website. Only latestly 3 banks are only available. The remaining all banks have migrated to the income tax e-pay portal. So if you have made your challan payment in IT department website, not in the tin website, then you have to click on download CSI from IT, not from this download. If you click on this download, what happens is it will try to identify your data from the tin website and it will not identify, it will not find anything, and it will say okay, your challan is a mismatch. Okay, so make sure if you are paid under IT, then click on download CSI from IT. If you are paid under tin, then click on this download only. So whichever is a relevant one, you have to click on. So once everything is done, click on your e-return. Okay, so if there is any errors, it will list for you one after the another. So I had not updated my deductor type, so here it is asking me to do the same. Okay, so now it will start validating internally through the FVU version given. So if there is any errors, it will show me the error report. So here it is saying total income tax deducted at source, invalid tax deducted amount, enter valid tax deducted amount. Okay. Sure. 15. Okay. So if you are not able to identify, you can just copy the number there and check what is the so error in deduction number, serial number 10 for the employee Kiran. So there is a error. So for this employee Kiran, so the value is wrongly mentioned. So they are saying the value has to be specified at least 8,590. Otherwise, do you want to continue? Yes. So I'll just close it as of now. Okay. S- Okay. One sec. Okay, so here there is an error because of the employee not providing the valid PAN. So this is found. So I can either continue to go with this, or I can get the employee to do with. So 20% tax reduction is already to be taken into consideration, or go with the higher amounting. Okay, so this is about the e-return process. So once the e-return FU is generated, so you can take the FU file and file it at the TIN-FC, or you can go for the online upload also. So online upload, you can click on the online upload, it will take you automatically to the login. So in your income tax department deductor login, the data has to be uploaded. So this is the first 3 months how you are supposed to be doing your process. Okay, so for the very first 3 months, how you will be going up for your process of ETDS. So you will just do the deductions and pay the deduction month on month to the bank, and then you will continue to do your e-return process. So all the 3 quarters you will be taking up the same. But when you come for the fourth quarter, there is a slight difference in the fourth quarter. So, taking into consideration that before the fourth quarter, the particular employee has given me the valid PAN who was in the invalid PAN case. So that person has given me the valid PAN number. Okay. Okay. So for the first 3 quarters, the data has been done. So in this file for the first three, so currently the December month is already done, and post the December month, the return filing is already been processed for this. So I have just taken up the fast forward mode of filing up the 3 quarters and taking up directly for the fourth quarter. Okay, so for the first 3 quarters, it is done over here. So you can see here the acknowledgement number. I have logged the quarter also, so that there is no editing into the data. So now when we come for the fourth quarter, so what we are supposed to be doing. So fourth quarter, I'll just create the new month, so which is January. Okay, then again the same process goes in, but probably taking into consideration that most of the employees will provide their declaration, finalized declaration, and all the proofs in the month of Jan and Feb. So here, before going that, let me import the declaration format. So taking into consideration that all the employees have submitted back their declarations, so I'll go for this import. Okay, so where is my, so I can put all the declaration formats received at my end to one folder. Okay, so load. So here it will identify the specified. So this is how it will identify the specified template. So that is why I was specifically saying that do not change any format of the template. Okay, so that will be removed. Only one which matches to the declaration format will be listed. So select, okay, and say import. So if there is any pre-existing data, then it will overwrite that information with what is going to be imported from the IT declaration form. Okay, where do I see this information? I can go to this more employee details. So here, according to whatever is imported, so that information will be coming in. HRA, Metro, so all those. You can see here this employee has declared for a home loan and home loan information. Chapter 6A, if there is an employee's detail. So chapter 6A, which is being imported from the declaration form. So what I had entered previously. So that informations will come and sit here. Okay, so likewise, if at all say an employee at the nth moment will declare some X amount manually, not via the declaration form, they will give it at the nth moment, then in such scenario you can directly enter it over here also. Okay, say for example this employee is declaring at the nth moment the house rent allowance. So here metro or non-metro, then what is the rent paid, so he will declare the annual rent information of say 90,000. So if the employee is declaring more than 1 lakh for the whole year, if the employee is declaring more than 1 lakh, then the PAN of the landlord has to be mentioned over here. So here the PAN details are available. So here for whichever employee, the PAN of the landlord has to be mentioned. And similarly, if the children studying or children hostel allowance is being declared at the nth moment by the employee, then that can be given over here. Or chapter 6A deduction, if the employees chapter 6A deduction is not captured till time, so that information can be captured over here. Okay, so here there are two types: assured amount and proof amount. Assured amount is what the employee says they may invest, whereas proof amount is for that X amount they have given the proof. So if you have mentioned during the option setting, if you have said calculate on proof amount, then the exemption will be calculated on this amount. Whereas if you are not enabled it, then by default the assured amount will be considered as a overall amount. Okay, so this is how the details will be taken into consideration. So this is about more employee details or declaration importing. So how the declaration can be imported. Okay. Now after that, again the same process will run. If at all I have forgotten any of the processing, that is maybe I should have processed some X amount and I have not processed it, then every time after my processing, I have to make sure that my port data, port details to TDS and computing all has to be redone. Otherwise that value will not be taken into consideration and that value will be out of the TDS purview. Now here in this case I have forgotten to make a medical claim, so medical reimbursement claim I have forgotten to do it, so that I am doing it right now here. So again I am coming back. Okay, so now I have to again redo the portion of port detail. This is very important, otherwise, as I mentioned, that X amount will not be considered for my calculation. Okay, compute income tax, and then port TDS to salary. Okay, so here you can see now their tax payable and their tax deducted. Now, whatever the tax payable, they're supposed already it has been overshooted. Means during the before declaration portion, they have already paid up whatever they were supposed to be doing. So that will be shown up in purple color here. So for those employees, the value will be nil. Okay. So port. So now in this month, only one employee you can see. So only for one employee, the TDS is getting deducted, and again the same process of salary editor. So processing the salary editor is also very important, because the same has to reflect onto your salary. All right, so this is again the fourth quarter. So taking into consideration my Jan work is completed, so I'll go for the Feb month. Okay, so Feb month, if there is any other additional income or whatever it is, so that and all can be taken into consideration. So I'll just put up a leave encashment again here for one of the employee. $42 is there. I'll just put up an encashment of 30. Basic is only hit. So shown in salary. Okay, save. So if it is a one-time TDS, if there is any computation. So for this employee, as they are now, maybe this employee is not taken into consideration. So then port data. So my salary is getting updated here. So come back here, salary, leave encashment, TDS, select and compute. So you can see the value is not there. Just save this, close, come to compute income tax. Okay, so income tax is computed. Now port TDS to salary. So now you can see for this employee, after the new month creation, there is a small amount. There are certain incomes which will be considered only on the month creation basis, like reimbursements and all. So previously that was not included. Now it is including, and the small income is coming in, tax is coming in picture. Okay, so salary editor again here. Okay, so you can see the values here being shown up. Okay, So in case I have forgotten anything, do again the consideration before giving out. Okay, so LTA if not given to any, so 21, 22. So 22, 21, 22 if they have any. So this was a 21 year, so I'm taking the block period of 18 to 21 here. So whichever employee. So if they have any, so they still have the last chunk. So you can see here, okay, sorry, this is not a, okay. So that is done. So last, I'll come for the last month. Okay, so last month is done. So all the claims. Okay, so the last process I'm doing, the last month of the financial year. So data is getting ported. So this is for the last month. You can see all the months are created as of now. So port data. So data is already ported here. So before this, in the nth moment, there are times when the employee may come into you and say, "Oh no, I have one last moment declaration. I have one last moment entity entry." So you can come back to this more employee details and do any entries if at all you haven't. So any kind of entries you haven't. Okay. So otherwise, if nothing is there, just compute your salary details, and there are possibility that at the nth moment the employee may ask in for a change of tax regime. If the employee has nowhere shifted in between at the initials or anywhere, and the nth moment they ask in for a change of tax regime, then you can again come back over here and change in for a new regime. Okay, so here you can do that. Okay, so once that is done, lastly is your port. Okay, so this is for the last month. So as you can see here, now all the employees have paid over and above. So that is why no TDS is being listed for the month of March. Okay, so considering this, I'll just save the information. Okay, so for the month of March, no employees are paying the TDS, because for all employees, the TDS has been already completely deducted as of month of February itself. Okay, so this is about the TDS deductions. Now coming to e-return. So what difference we will be seeing as compared to the first three quarters when we come to the fourth quarter. So when we come to the fourth quarter, the initial processes are the same. There is no variation. Port data. So you will be porting the information. Okay, so 28, 30th. Okay, and port. So all the data will come and sit into your deduction details. So now here you can see here TDS from salary. It is not yet linked. Okay, so I'll see the deductions. So here all the deductions are listed, 12 deductions, 4 each in each month. Okay, so 4 employees. Come to the challan. So pay off whatever the amount you have paid each month. Okay, link deduction. Okay, done, save. So this is linked. Next, similarly, do for the second month also. Okay. Now linking. Now if you see for the third month, here the third month entries, there is no tax deduction, but the records are there because it is a zero TDS deduction. So I can use all these things and link it to a single challan. Okay, as I mentioned, even zero TDS records have to be linked. So I'll be linking it to the Feb month itself, because in March month there is no payment of tax. So there are only 2 challans over here. Now if I see the linking info, it's completely linked. Okay, so now after this, what am I supposed to be checking next in my fourth quarter? Specifically in fourth quarter, now you can see the salary information. So here if you see my salary overall year, the annual salary information will be listed. So I have to once verify whether all these information are correct, accurate. And very importantly to notice is the tax payable. So this if it is shown in brackets, that means excess tax has been deducted. The employee can claim back this excess of tax whichever is deducted during their IT return filing. So you will not be paying any amount back, so they have to claim it back during their IT filing. Okay, so if it is excess, no problem, but it should not be in the payable mode. That should, any amount should not be shown in the positive mode. And also the regime what is selected, that will be listed. If PAN details are not provided here, the PAN information can be again re-provided over here. That is in case of 1 lakh and above HRA rent claim. And in case of housing loan details, if they have provided housing loan, then the banker's PAN number has to be reported over here, whoever has given the home loan. So that banker's PAN number has to be provided over here. Okay, so this is about the salary, which is very important to be verified before to your e-return, because lot of corrections which will rise up will be because of wrong salary information provided. And the same information whatever you are going to declare it out here for the employee, the same to same information will be provided in the part B. So that is why being sure about giving the proper data during your fourth quarter salary information is very important. Parallelly, you can also see the quarterly report over here. So you can see what is the overall summarized information in Excel. If you want to see, you can see the overall information also. Okay, so this is for quarter 4. So likewise for every quarter there is a quarterly report, every quarter on quarter. Data quality report as it goes. Previously I have explained. So the same way. So lastly we come to the e-return. Invalid receipt number. Okay. So all the errors have to be rectified before going ahead. Otherwise, that will not allow me to continue. Okay, so you have to get it as file validated successfully. So once the file is validated successfully, so next you will be receiving all these files. So here, if you are doing a TIN-FC filing, then form 27A, you have to take a printout of the same. So you have to take this printout, you have to seal and sign over here, whoever has given as the authorized signatory, they have to put a seal and sign, and along with the FVU file, so this is a FVU file, they have to submit at the TIN-FC. If they are going for online filing, click on online upload. So they will be asked to give your income tax department deductor login information. So this is basically the deductor login information. So they have to provide the deductor login information and continue. So the zip file will be uploaded, wherein you have to attach the digital signature of the authorized signatory via the EM signer tool provided by the income tax department only. Okay, so they have to attach the DSC, and once the DSC is attached, the file will be uploaded, and then further to that, your returns will be filed online. Okay, so there is also method for EVC received at the Aadhaar linked OTP. Okay, so there are two options: either they can go for DSC filing, or they can go for Aadhaar linked EVC receival. So both the ways they can file their online returns. So this is for the fourth quarter return filing. So once it is done, the acknowledgement number has to be entered over here. So whatever the acknowledgement number they get, and they can say lock quarter, so that the complete data will be safe and there will be no more editing into this particular quarter. So post this comes the form 16 generation. So once your uh, acknowledgement is received, so after 3 working days you can get the receipt number over here. So once you get the receipt number, and you see the status as accepted, sometimes there are possibility of rejection of your FU file. Maybe if you are not use the latest FU version for preparing your FU file and all, there are possibility of rejection of your FU file also. So if it is rejected, you have to redo your FU filing. Otherwise, you can go for your form 16 generation. So for form 16 generation, you have to go manually to the TDS website. So TDS, so once you come over here, you have to manually put a request of form 16. So whichever financial year you are putting up a form 16 request, you have to log into your traces portal, and you have to put up a manual request. So once a manual request is accepted, within 24 hours, the files will be made available to you. So the files will be available in the zip format. So you can see here two formats are there. So one request will provide you two formats of form 16. One is part A and one is part B. Using these two files, the form 16 has to be generated in software. So how do they do that? So under reports, TDS reports, form 16 with traces. So here you have to read the zip file. So first is the part A. Okay, and then say generate. So it will automatically open the traces utility and read the file, and it will only take in the password of that and create a folder also where the PDF converted files will be generated. So if you want to digitally sign the part A of traces, then you can attach your digital signature, soft copy of digital signature over here. Or else if you already have your soft copy of digital signature made available in your web stores, then certificate stores, you can see here, you can select them and continue for your file process. So click on proceed. So this will go on to create your form 16 part A in PDF format. Okay, so there are 12 files generated, and you can see them over here. So these are the 12 files. So the naming is by default the PAN number and the assessment year. So this is not the financial year. So this is the assessment year. So double click, you can see this is the part A file. Okay, so once this is done, next is part B. So part B has a separate traces converter utility. So that is why we have to do it one after the other. So read the part B file and click on generate. Give it some seconds so that it will read by its own. Okay, so it is done. Again the same, but there is a version difference. If you can see in the top, it is specifically saying the different versions. So here also, if part B will be dependent on how many data you have given during your fourth quarter salary details. So if you are given less, then it will be less. If it is more than the 3 quarters deductions, it will be more. So here you can see it is 20 PDF. That means 8 members details have been additionally given during the fourth quarter filing salary details. So this is where the mismatch will come if you have not given during the first 3 quarters for zero TDS. If you have not given the data, then for such employees in the fourth quarter, their salary details will be mentioned, but their deduction details are not available. So part A will not be available, only part B will be made available. So which may give rise to confusions between the employees, why part A is not available, why part B is only available. So to avoid that, we suggest even if there is zero TDS, show it during your first 3 quarters also. Okay, so now both the files forms are generated. So this is a part B. Okay, so here all the salary details, you can see the salary details here. So the salary details are provided over here. Okay, so now you can either mail this as it is, that is part A and part B as two different PDFs. You can just mail it across to your employees, or else no, I do not want to mail it as a separate. I want it as a single part A and part B into a single PDF. Then we have the merging concept over here. So you can merge it over here, and additionally you can also put, if perquisites are made available to the employees, that is reimbursements and all, you can additionally attach one form 12BA also, which is related to perquisite. If you want, you can. Otherwise this will be generated from the software. And a summary of the TDS deduction, if you want, you can do it, and click on merge part A and part B. So here when you're merging, you have to say where your part A folder is available and where your part B folder is made available. So this is your merging utility. So you have to state your location. So this is where I have my part A, and this is where I have my part B. Okay, so any additionals that will come here. So if you want to digitally sign this file, now if you have not digitally signed during your generation, now you want to digitally sign it post that, then you can go for digital signing. But for that you have to use our another software, which is Saral Sign. So that you can select on, and sign at the signature position wherever in the part A and part B they have mentioned as signing authority. So there itself it will sign up. Okay, and click on merge. So you can see here automatically one pop-up will come here. So for these PAN numbers, there is no part A found. Okay, so merged data will be coming and sitting over here. Now the merger will happen based upon the PAN numbers given in the employee master. Okay, so it will identify part A and part B merging completed. So it will identify and it will merge. Okay, so this is how the process of part A and part B will taken into consideration. So this was the overall process of doing up. So we started from the basic settings. We saw the initial 1 quarter, how month on month the processing without any additional information. Then we fast forwarded into the fourth quarter. We saw how the data with the declaration information were all taken into consideration. And lastly, the fourth quarter return filing and form 16 generation using the zip file downloaded from the Traces website. So this was all the presentation from our end. Have a good day. Thank you. Bye bye.